Hello, I am Barbara Ash, Executive Vice President of the Montgomery County Chamber of Commerce, President of the Chamber's Foundation, and National Director of the Veteran Institute for Procurement. On behalf of these organizations, I would like to welcome you to today's webinar, the Government Contractors COVID-19 Survival Guide. As the impact of COVID-19 continues to reshape our daily lives, government contractors need an action plan to manage the future of their businesses and contracts. Today, Christine Williamson, partner in government contracting industry practice for CohnReznick, and Jason Fleetwood, partner of hospitality industry practice at CohnReznick, will bring you up to date on the latest information and help you navigate the right course for your business in the weeks, months, and years ahead. Additionally, Bob Moss, CohnReznick's National Director of Governmental Affairs, will provide updates on federal legislation impacting government contractors. The slides and audio from today's webinar will be made available on the Chamber and VIP's COVID-19 resource page following this broadcast. Please submit your questions throughout today's presentation. We will try to address some of them at the end of today's webinar. However, any questions that we cannot answer live, we will submit to the presenters after the broadcast and send the questions out to you when they are available. Now, it is truly an honor to introduce Christine, Jason, and Bob. First, let me introduce Christine Williamson, who is a member, as I mentioned, of CohnReznick's government contracting industry practice. She provides financial and accounting consulting and business services to a variety of clients, providing solutions to complex issues such as the development of indirect rate structures and tax ramifications of acquisitions. Christine serves on the Chamber's GovCon Council and also on the Chamber's Foundation Board of Directors. She is joined by Jason Fleetwood. He is a partner in CohnReznick's hospitality industry practice and also provides services to private enterprises. He has more than 16 years of experience in the areas of client development, engagement management, and oversight and quality assurance. Last but certainly not least is Bob Moss. With more than 30 years of experience, Bob leads CohnReznick's federal and state government relations efforts with a focus on affordable housing industry. In this capacity, he helps to protect client interest in the affordable housing industry through the legislative process. And now, I will turn today's webinar over to Christine Williamson.
Thank you, Barbara, and good afternoon to everyone on our webinar. Thank you for joining us. For our agenda, I'm going to quickly go through that and explain to you how we've set up our presentation, and hopefully it flows well for you so you get a lot of understanding on what is happening today with our economy, especially for government contractors. First, we're going to start out with Bob, and Bob is going to give us a legislative update, and we're going to find out from him just kind of how we got through March, an amazing month that we've just seen. Then we're going to touch on overview of the CARES Act, and I'm going to really spend a lot of time helping you with funding, weaving that all throughout the data. And then Jason is going to follow with that and between Bob and I on the payroll protection program and look at, just what it is, make sure you understand it, understand the FAQs that are coming out on it, and we have some really interesting information to provide on the latest numbers. And you'll see all this agenda in our next slide, which you can go to, Amy. Thank you. I'm going to, like I mentioned, go through the opportunities for government contractors because of this major stimulus spending that has just occurred to the federal government and to many agencies. We're going to talk about the money that's been obligated so far for COVID-19 that is being awarded out to various companies. Jason is our tax specialist, and he helps me with a lot of government contractors in addition to his hospitality clients. So Jason's going to give us an update to kind of break it down on those relief provisions and due dates that government contractors need to be aware of that really impact your cash flow. And then Jason's going to kick it back to me with some survival tips as a government contractor, breaking it down to now, what do you need to do? Next, what do you need to do? And what's the new look like to you? And we're going to provide some really good best practices to surviving to get through this, through June, through September, through the end of the year. And then I'd like to touch on the relief that government contractors are receiving through many of the guidance that's coming out from agencies. I'm going to end with existing opportunities that you can't forget about that have been out there that the government is working on, and then touch on the acquisition flexibilities that contracting officers have been given during COVID-19 from the different agencies. So we can go to our next slide now, and I'm going to turn it over to Bob.
Well, thank you, Christine. I appreciate it. Good afternoon to all, and I hope you are all well and safe. In the past 30 years working with Congress, certainly nothing like this has ever happened, where we've yearned for more news and more communications from the federal government at all levels. And I hope to help you today with a daily briefing on what's been done, what's coming down the road this week, and what I think might happen. And I hope it is very helpful for you. In regards to March Madness, the amount of spending in legislation was actually the amount of volume you'd see from Congress over 8 to 9 years, if not more than that. And what we thought was supposed to be one of the lamest years in Congress in decades after the impeachment wrapped up and we turned to the presidential, we expected no major legislation was expected to pass, and a lot of things have changed. Right now, my advice is if you're waiting for regulatory guidance on an issue, you may have to keep waiting, as the agencies are clearly filling in the rules behind the policy as opposed to creating rules and policy at the same time in a normal setting. And as I discussed on before we got on the phone, there is a little bit of the wild, wild west going on, but we'll have to push through and keep our ears to the ground. Just last night, the SBA, as an example, issued new guidance for some of the PPP loans 11 days after they started accepting applications. So things like that are happening. But I can tell you one of the bright spots in all of this is the high level of communication that's occurring, for me anyway, with both congressional staff, leadership staff, and agency staff. And even if the response to a question is, Bob, we don't know yet, I'm getting responses, and I'm sure everyone is getting responses. Everyone's at home working, and they're all tuned in. So let's flip to the next slide, please, Amy. Here you can see the madness of March. It was an $8.3 billion bill early March 6th for coronavirus preparedness and response. That was kind of the first mitigation bill. The second bill, larger, $100 billion, March 18th, more worker assistance, emergency paid sick leave, and of course, phase 3, the CARES Act, which was beyond believable in size. And Amy, we're going to go right to the next slide here, please. So this week on Capitol Hill, on Monday, the Senate gavelled in at 10 a.m. for 5 minutes and gavelled out, signaling no concessions were made over the weekend. But on Monday, the House notice was posted. Members were advised not to return till May 4th. Yesterday, the Senate announced that it will not reconvene in Washington sooner than May 4th as well. And the stalemate from last weekend appears to be breaking right now as we are on this webinar for what you could call a supplemental CARES bill. And the number they're talking about right now is $500 billion. Treasury Secretary Mnuchin and Senate Democrat leader Schumer are expected to reach a deal as soon as tomorrow afternoon on an interim relief bill. Obviously, that would provide more money to businesses, hospitals, state governments. And that deal could lead to legislation being passed and through the House no later than early next week. I believe the Senate can pass a unanimous consent bill, but it will be tougher in the House, given the representative from Kentucky is still saying the Constitution requires a physical vote in D.C., so you may see them have to come back for a vote next week. Let me talk about what is driving Congress to a deal right now. It's really the demand. It's the demand by cities and states, rural hospitals, the SBA loans being tapped out, running out of money very, very fast. And according to a survey that was released yesterday, more than 2,100 U.S. cities are anticipating major budget shortfalls this year. So these findings are injecting new urgency for Congress to safeguard these cities and states, because as we know, local governments generally cannot run deficits, unlike the nation's capital, so that leaves them with no choice but to slash spending or to raise taxes. And then, of course, what's driving it on Sunday, this past Sunday, the nation's top governors asked for $500 billion in new financial assistance to stabilize state budgets as well. Also breaking and driving Congress is a report that the government-owned hospitals were shut out of the virus rescue package, putting a lot of vulnerable rural healthcare systems in danger of running out of money in many rural areas just as the virus hits the heartland. So again, lawmakers are now pleading with the administration to make an exception for rural healthcare providers and for a legislative fix. And that's about 1/3 of rural hospitals, as well as over 15% of rural health clinics that are owned by local government. So this hole in the stimulus, like many, was apparently unintentional. And of course, on Monday evening, as Jason will report, the SBA reported that lenders had approved more than 959,000 PPP loans, totaling over $232 billion. So as all of this news rolls in, it will ultimately drive Congress and the administration to action, despite any stalemates we're seeing right now. And the goal of recovery, what is next for relief in CARES Bill 4, COVID Bill 4, whatever you want to call it, all eyes are on recovery in May. In infrastructure, we've heard about it for a long time now, haven't we? It might not be the most enticing ask for the Democrats right now. Most infrastructure projects take time to get started. And the Democrats are talking about waiting until after the election to push a mammoth package to make sure the administration doesn't pour the money elsewhere. So the Democrats certainly have the power right now to pursue a number of initiatives, including funding for zero-emission geothermal drilling projects that employ laid-off oil workers, and reviving stimulus programs like solar and wind that helped launch renewable power in the U.S. and put thousands of installers to work back when we had the financial crisis. There's some move right now on the housing front, and as I close out my remarks, one of those ideas is for emergency rental housing vouchers. You know, as this virus has ravaged the economy, the impact has not been uniform. Low-income hourly workers have been more likely to be laid off than their salaried counterparts. So the number of people affected, a disproportionate number, are renters, and they work in 4 industries, most likely to be affected: food and accommodation, entertainment, retail, and transportation, and compose 26% of the labor force. So Christine, as I hand this back to you, there are a number of drivers right now occurring this afternoon and tomorrow, and we're hopeful there will be more relief on the way for American families soon. Thank you.
All right. Thanks, Bob. And don't go anywhere, because we're going to pull you back in for some questions and chime in as needed. So
You got it.
I want to go back to phase 1 for just a minute, because that was $8.3 billion. And then plus the phase 2 and phase 3, we're at about $2.4 trillion that was passed, legislation that was passed in the month of March. And that's critical to the government contracting community because they're critical to helping the government with a lot of the mission and a lot of the treatment and the retrofitting of facilities and the research and the development and the creation of the masks and respirators. And it's not all just specific government contractors, but a lot of government contractors are helping out. And so right now, what you see on this slide is that we're seeing about 2.5 billion. And I got to get used to saying billion. It's been hard to do, and trillion. But 2.5 billion has been obligated through April 9th to various companies, about a good 25 to 50 companies. Johnson and Johnson had the top ranked contract for advanced treatment development. 3M and Honeywell combined have about 328 million of purchasing and developing masks and respirators and medical supplies. And then what we're seeing, and what Bloomberg, who I'd have to thank for this slide here, is expecting that a lot of the multiple award contract schedules are going to be used to procure these and expedite these contracts, these new awards. This first round of stimulus is kind of broken down with HHS receiving, that's Health and Human Services, receiving about 6.5 billion. Then we have state and USAID at 1.2 billion, and then SBA receives about 20 billion. This slide deck also includes other spending by DOD and HHS, and more solicitations are coming out every day. The prediction is that certainly probably 3 billion to 4 billion will be obligated this year, and then you're going to see a spike in 2021 and 2022, obviously, from all of this spending. And for those of you who aren't familiar with these schedules, these are really GSA library schedules that include a large pool of contractors that the government can purchase from. The 6511A or 6512A is medical equipment supplies. And federal, state, and local customers can buy off of these schedules. So these schedules, we feel, are really going to be utilized to get the money out to the proper places. So in the next slide, Amy, what I'd like to do is kind of break out how the 2.2 billion has broken down, and that's the third phase. And so this slide, if you take a look at it, it's really helpful, and you can see how Congress is trying to touch everyone and help out. It was well thought out, where you've got in the lower left-hand quadrant, that's the small business loans. Jason is going to talk about that. That's where the PPP loan money has been provided. When you go up to the middle there, the direct payments to families, the 290 billion, that's your recovery checks. And how appropriate are we doing this webinar on April 15th? And I know my two children that are 20 years old received their checks today. So I got a text from that. So it's amazing that we're doing this webinar on the 15th when Jason probably wouldn't be able to talk normally in other years. And then what I circled here for you is really the 385 billion miscellaneous. Love the word miscellaneous here. And that's where we're going to see a lot of the agencies and what they received. That's the supplemental appropriation that government contractors are going to have that opportunity to step in and gain a lot of work to help with infrastructure education stabilization, IT, and various other issues that are, and funding that's provided in that $385 billion. The next slide, we're going to show you where the 385 is broken out. HHS again tops this phase of funding with $151 billion. So in total, HHS has received or will receive $158 billion appropriated with stimulus 1 and 3. So in the CARES Act, it was about 44%. Then following after that is Homeland Security at $46 billion, or 13% of the $385 billion. And then the VA and defense. And it's interesting, usually in any of our appropriations, we see defense at the top. And for once, defense is not at the top of funding in this situation. But really, all in all, there was about 26 federal agencies that got funding. I have the breakdown of that if anybody wants to email me. But you know, there's a lot of different levels of funding, and there's even funding for the Smithsonian to clean up the zoo. And each one of the agencies' offices of Inspector General received money for oversight to ensure that all this appropriations is used for lawful purposes. So it's about $1 billion. Okay, so now we have a polling question next, and I'm going to read that, and then we're going to give you about 30 to 45 seconds to answer. So how would you characterize the magnitude of COVID-19 disruption to your business? You know, are you facing an immediate, temporary, or permanent closure? Are you in a triage situation, managing your capital to survive? Are your sales negatively impacted, but your liquidity is still strong? Is there really little to no impact to your business just yet? And then lastly, is your business not disrupted and you are winning new work? I hope to hear that a lot of you are in that last category. We're hearing a lot of positives from government contractors in general, but you know, it depends on where you were in your contracts. Were you in between contracts? Were you doing a lot of bid and proposals? You know, it's all across the board as to probably what we're going to see here. But for the most part, government contractors have been really resilient through this. And what we're seeing here on the slides that you can all see is 31% say that you are in a triage situation, managing your capital to survive. So we're here to help you, and hopefully this webinar will give you a lot of good ideas. Good to see that there's a little to no impact in your operations yet, from 36%. And then there is 6% of you that say your business has not been disrupted. And I think you're really gonna like to see what we talk about in that PPP program, kind of what the latest statistics look like for that. So stay with us. Those of you facing immediate, temporary, or permanent closure, we're here for you again, and we're sorry that that's happening, but let us keep moving on, and we'll help to give you more ideas to stay in business. So Jason, I'm going to turn it over to you. Give us an update on this amazing Paycheck Protection Plan.
Thank you, Christine. And I want to echo Bob's sentiments from earlier and hope that everyone on the webinar today is safe during these unprecedented times. I must start off by saying that Christine was right. As a tax professional, I don't know that I ever thought I'd have the time to do a webinar presentation on April 15th, but given all the changes over the past several weeks, here we are. So next slide. As Christine and Bob alluded to earlier, one of the big items discussed in recent weeks, and still a very hot topic, is the Paycheck Protection Program, or PPP, as everyone is referring to. This program is a federal loan program that created $349 billion in new lending capacity to help small businesses affected by COVID-19 virus to cover payroll and certain other operating expenses, really with the main purpose of incentivizing employers to retain their employees. There are eligibility requirements. To be eligible for the program, you need to be conducting business operations prior to February 15th, 2020, with 500 or fewer contract or salaried employees. Those employees need to have their principal place of residence here within the United States, or you're a business that operates in a certain industry and meets the applicable SBA employee-based size standards for that particular industry. You're also eligible for a PPP loan if you're an individual who operates under a sole proprietorship or as an independent contractor or eligible self-employed individual in operation prior to the February 15th date. As a borrower, you have to certify that economic conditions make the loan necessary to support operations, and if you have an application for another 7A loan that is pending, and you must be in good standing with the SBA. So once you determine you're eligible, what are the approved uses for the loan? The proceeds for the PPP are to be used for payroll costs, which we will go into a little bit more detail here in a few minutes. Any costs related to the contribution of group health care benefits during periods of paid sick, medical, or family leave, including insurance premiums, mortgage interest payments, any interest payments on debt obligations that were incurred prior to February 15th, 2020, and payments for rent and utilities. Regarding the loan terms, the loans will be guaranteed under the program under the same terms, conditions, and processes as other 7A loans, with some certain changes, and those changes include that the guarantee percentage is 100%. There's no collateral or personal guarantees that will be required, and the interest rate on the loans is set at 1%. The maximum loan that you can acquire under the program is $10 million, or an amount that you calculate using a payroll-based formula that is specified within the program. And the term of the loan are for a period of 2 years. And then under the 2-year loan period, you're allowed a 6-month deferral on any payments. And there are no lender fees or prepayment fees within the loan as well. I think the beauty and what is attractive to so many businesses regarding the Paycheck Protection Program loans are that if the money is spent correctly, the entire loan will be forgiven up to the full principal amount, including any interest that is accrued. The actual amount of the loan forgiveness will depend on your total qualified costs, including payroll, interest, rent, utilities, over an 8-week period following the date of the loan. I think the key here for the loan forgiveness is that not more than 25% of the loan forgiveness amount may be attributable to your non-payroll costs. And I think everything under the loan forgiveness, we are getting and seeing a lot of questions from clients and different individuals surrounding the mechanics of the actual loan forgiveness portion of the program. And we are still hoping for additional guidance from the SBA, as they indicated in their final regulations that such guidance will be forthcoming. Okay, Amy, next slide. Moving on to the next slide. I'm sure that many of you in the call went through the calculation process for determining the maximum loan amount with your lender. The maximum loan amount that you can borrow, first you have to aggregate all your eligible payroll costs, and these costs are highlighted there on the left: salary, wages, commissions, payments of vacation, parental, family, medical, and sick leave, payments required for the provisions of group health care benefits, including insurance premiums, payments of any retirement benefits, including your employer match, and then also payment of state or local tax assessed on the compensation of any employee. It's also important to highlight what is not included in your eligible payroll costs. There is a limitation on the compensation of an individual employee with an annual salary of $100,000 as prorated for the cover period. There is also, you also cannot include taxes imposed under certain chapters of the Internal Revenue Code. And that basically means employer-paid FICA taxes should not be included in your eligible payroll costs. And then any compensation of an employee's principal place of residence is outside of the U.S. would not go into your eligible payroll costs. And then finally, any qualified sick and family leave wages for which a credit is allowed under the Families First Coronavirus Response Act also aren't allowed. I think it's important to note that when you're aggregating all of your eligible payroll costs, you can use data from either the previous 12 months or from your calendar year 2019. So you have a choice when you're aggregating your payroll costs in determining that. Once you aggregate your total average payroll cost and you subtract any compensation paid to an employee in excess of $100,000 annual salary, you take the next step of calculating the average monthly payroll costs by taking your total and dividing by 12 months. Then you'll take that monthly average payroll cost and multiply it by 2.5. And then if you had received an economic injury disaster loan or EIDL loan, as they're being referred to, between January 31st or April 3rd, you also add that outstanding amount into your total. And then you end up with your maximum loan amount. Next slide. The SBA, in conjunction with the Treasury, have been issuing frequently asked questions over the past week to help address the multitude of questions surrounding the loan program. Amy, could you go one more slide? Looks like they got mixed up. I guess go back to. Anyways, there were frequently asked questions over the past week, and they are continued to be addressed. So I wanted to highlight a few of them. It looks like, Amy, the slide was left out. One of the questions that is being asked is should payments in an eligible bar made to an independent contractor or sole proprietor be included in calculation of the eligible borrower's payroll costs? There are a lot of questions surrounding that early on when folks were submitting for the loans, and it was clear in the frequently asked questions that no, any amounts that an eligible borrower pays to an independent contractor or sole proprietor are excluded from the payroll cost. But those independent contractors or sole proprietors are eligible themselves for a loan under the PPP and could submit for the loan themselves if they satisfy applicable requirements. Another question that was causing confusion was that the original language excluded from the definition of payroll costs any employee compensation in excess of $100,000, as I mentioned previously. And the question was, does that exclusion apply to all the employee benefits of monetary value? And the answer to that is no. It applies only to the cash compensation, and does not include the employer contributions to any defined contribution retirement plans or defined benefit retirement plans, as well as the payment for employee benefits consisting of the group health care coverage and insurance premiums. We talked a little bit about the loan forgiveness, and it was addressed in one of the recently frequently asked questions at a very high level. And the question was, how should a borrower account for federal taxes when determining its payroll costs for the maximum loan amount and uses of the loan? And under the Act, the costs are calculated on a gross basis without regard to any federal taxes imposed or withheld. And as a result, payroll costs are not reduced by taxes imposed on an employee and required to be withheld by an employer. So as an example, an employee, if you have an employee who earned $3,000 per month in gross wages, and from which that $500 are in federal taxes are withheld, let's say, that would count as $3,000 in qualified payroll costs. The employee would receive their $2,500 and $500, would be paid to the federal government. However, the employer side of those federal payroll taxes imposed on the $3,000 of wages are excluded from the payroll costs under the statute. And I know I was getting a bunch of questions recently because when the act came out, there was a lot of confusion, and then we've received more guidance, and folks are asking that they filed or approved a loan application based on a version of the interim final rules that were published on April 2nd, and further guidance continues to come out. Do they need to take any action based on that guidance? And the answer there is no as well. The borrowers and lenders may rely on the laws, rules, and guidance available at the time of the relevant application. It was noted that if you are a borrower who previously submitted your loan applications and it hasn't been processed, that you may want to revise your application, based on clarifications as these frequently asked questions are released. And now for an update on the Paycheck Protection Loans, the American Bankers Association reported on April 12, 2020, that $205 billion of the $350 billion appropriated had been claimed. And additionally, just this morning, we received information from the SBA that through April 13th, $247 billion had actually been appropriated. With the vast majority of those approved loans, almost 70% were for $150,000 or less. And I think, Christine, we have a few slides coming up that will illustrate the breakout of the loan size and industry application on what we've seen to date. Sole proprietors and independent contractors were allowed to start submitting their applications on April 10th. And the interim regulations for their loans were just released yesterday, and we're trying to digest what was included there. And I've mentioned a few times that we're still waiting on further guidance on loan forgiveness from the SBA and Treasury. And if everyone's watching the news, there are rumors that there will be additional funding. It seems to be that it's just a matter of time, but right now there's no guarantee of that. And Christine, I know that you had some conversations as recent as yesterday with a few different lenders, and you got an update on their perspective. Do you want to share with everyone what you heard and what they are saying and what you learned from those conversations?
Sure. And Amy, if you switch to the next slide, I didn't leave out my slide. I left out Jason's slide, I guess, before. So that was my fault, Jason. Sorry. But we talked to three major lenders over the last couple of days, and it was really interesting, Jason, to hear what they had to say. I mean, basically, it's an imperfect process of doing something and building a system in 9 days. I mean, it's pretty amazing that they kicked this off April 3rd, and here we are, April 15th, talking about these numbers. So it's an imperfect process, but with a large volume, it's just a fact. There's going to be issues with it. Documents really weren't ready by SBA, or they were changing, and some banks went ahead and forged ahead, is what they said. Others kind of waited, and so some people may be getting their loans approved a little bit later than some, and that's why. These documents are really the bank's documents. The SBA is a fiduciary providing the guidance of the 7A loan, but the documents you're going to get are from your bank. The banks also said, this is the highest sense of urgency and fear that they've ever seen in people, because this was a first come, first serve on getting your application in and getting it approved. Most of them said their technical teams, their loan approvers, legal, everybody had been working 24/7 because they could really feel the client's stress to make it in before this $349 billion would run out, which you're going to see some numbers where, we're not seeing it run out just yet, but we hope that this information here today helps you to then apply for the loan if you do feel like it is needed for your business. But there's a lot of frustration on the clients, but there was a lot of reward, and the banks were working really hard because they knew how important it was to their clients, which of course they started with first, and then several of them have started with their non-customers. And if you need names of banks, contact us. We can give you a few additional that are accepting non-customers. One of the largest banks said, we had to do things right because who's going to get targeted in the out years for failures of this? And he said, when the auditors come out, it's going to be the big banks that they're auditing. So as we've been building the seminar and preparing for it, we had been looking and trying to find. We felt like SBA and Treasury were kind of keeping a tight lip on how much had been loaned and actually approved. We don't know if all of that money has gone out yet. But if you go to the next slide, I just want to take a pause here at what you're going to see. It's quite amazing. This is through April 13th. And for me, it was just, I'm sort of in awe that there is 1 million and more loans that were approved, 4,664 lenders at $247, $248 almost $1 billion. And if you look at it, 85% of the loans were for loans of less than $350,000. So that helped a lot of small businesses. The average loan size, like Jason said, is just about $240,000. It's really nice to see these numbers because we've heard Congress, we've heard different people talking about it, different news wires, but to see the actual numbers, is quite amazing. The next slide talks about the NAICS code that we're seeing. A lot of government contractors fall in that second one under professional, scientific, and technical. That is 126,000 approved loans at almost 30 billion. So 12% of the total that has gone out. But when you look through the different NAICS codes, there is a lot of averaging. Kind of when you look at the percentages, no one really sticks out more than the other. But good to see that different industries have really tapped into this. And we hope people, will continue to keep folks employed, as you'll need to do through this loan forgiveness certification. So on the next slide, and you will get a copy of these slides, so you'll be able to go back to the information. But our polling question number 2 is with regards to the CARES Paycheck Protection Plan, you are eligible and you have applied. So go ahead and check that. Or you are eligible, but you won't apply. Now, I've got some clients that say, I'm not being affected, and I'm not going to apply. I'm not eligible for the Paycheck Protection Program, but what I will do is take the employer retention credit, which Jason is going to talk about later, which does help companies that are larger and that are going to see a reduction in revenue or see a reduction in the number of employees. And then if you need help further in determining what you should apply for and just what you can take, you should mark that item there. So, we've heard a lot of folks talk about whether or not they are going to apply. And one thing to mention about that is, if you haven't applied yet, and it looks like 25% of you need help determining that, we're telling people to still apply and get in the queue. I've talked to the banks and they've said, hey, even though it seems like the money's running out, get in the queue because the next round of funding, you'll be ready to go. So 63% of you said you were eligible and applied. So that's good. You listened to Jason talk about the program, and you probably had to work on it over the weekend to file. So it's good that you got that. That's water under the bridge. But for those of you that need help further let us know. And it's good to see that some of you are large enough where you probably will take the employer retention credit. So I think that the CARES Act was well thought out for different types of businesses, for different types of needs. And so Jason's going to go through quickly some tax relief provisions, so then I can get to some of the government contracting guidance, because I see it's 1:15. So Jason, why don't you take it quickly through tax relief?
Yep. Thanks, Christine. I thought we would be safe this year from a tax perspective after 12 to 24 months of navigating through all of the tax provisions, including the Tax Cuts and Jobs Act. However, with the CARES Act that was placed into law, we are now forced to revisit another whole set of rules. And the CARES Act itself has added provisions for businesses and individuals and made several changes to the TCJA. So next slide.
Yeah, and I think this was something I was going to just help you just in discussion. We wanted to put this out here for everyone and not go through it, but we are seeing government contractors provide the family medical leave. A lot of them already provided the sick leave, but it's interesting on what are the qualifications for taking the leave. And what we're telling government contractors is to set up separate charge numbers for these and track it. You will get a credit in your 941, so you want to talk to your payroll provider. But take a look back at this, at your qualifying reasons for taking that leave, and set up separate charge numbers. And Jason, you want to add anything more to that, or go to the next slide?
Oh, no, we can. That was great, Christine. Thank you. We can go ahead and move on to the next slide. Keep it going. So one of the new business provisions under the CARES Act was the employee retention tax credit. And, while the PPP offered a lot of small business owners a great opportunity, for others who may not take benefit of the PPP, this tax credit provides a slightly different opportunity. It provides a refundable payroll tax credit for 50% of qualified wages paid by employers to employees during the COVID-19 pandemic. And the credit is basically available to employers whose, one, their operations were fully or partially suspended due to a COVID-19 related shutdown order, or two, gross receipts declined by more than 50% when compared to the same quarter in the prior year. And for employers with greater than 100 full-time employees, the qualified wages are wages paid to employees when they are not providing services due to the coronavirus-related circumstances. And for eligible employers with 100 or fewer full-time employees, all employee wages qualify for the credit. Whether as a business you're open for business or subject to a shutdown order. The credit itself is provided for the first $10,000 of compensation, including health benefits paid to an eligible employee. And it is provided for wages paid or incurred from March 13th, 2020 through December 31st, 2020. There are a few other restrictions, but it is important to note, and I think Christine alluded to it earlier, that this employee retention credit is disallowed for any businesses receiving loans under either the EIDL or the Paycheck Protection Program. The CARES Act provides further relief for employees, including any self-employed individuals, by deferring 2020 payroll tax payments due between March 27th of this year and December 31st. Essentially, employers must pay 50% of the deferred payroll taxes, which are the 6.2% Social Security tax on employee wages, by December 31st, 2021, and then the remaining 50% by December 31st, 2022. Any self-employed individuals will have 50% of their employer equivalent self-employment taxes deferred as well, with 25% due December 31st, 2021, and the remaining 25% by December 31st, 2022. With the payroll tax deferment, I will point out it's important to note that business owners who have debt forgiven under the PPP are ineligible for this benefit. As I mentioned earlier, there were also the CARES Act made several changes to the Tax Cut and Jobs Act. There were modifications to net operating loss provisions. Post-CARES Act, there was a suspension of 80% of the 80% income limitation to net operating losses, and it allows for a 5-year carryback. And this is a substantial change from the pre-CARES Act, where net operating losses could only be carried forward but not back, and could only offset up to 80% of a taxpayer's taxable income. These modifications on the NOLs affect tax years beginning in 2018, 2019, or 2020. And, what effect does this have? I think NOLs in the affected years, now you can fully offset income. There's no more 80% income limitation. And the losses generated in the affected years, we can now carry back 5 years from the year that the loss arose. And that gives a taxpayer an opportunity to go back and recoup some prior year taxes that were paid. There's some certain other nuances and rules that I won't go into, but obviously this is a planning opportunity with any businesses to incur a taxable loss in 2018, 19, or 2020. The CARES Act accelerated AMT credit recovery for corporations. The TCJA had repealed the corporate AMT tax with transition to allow for corporate taxpayers to utilize certain remaining minimum tax credits for 2022, and the CARES Act accelerated the ability for companies to recover these credits, and effectively it allows the corporations to utilize any of these remaining minimum tax credits by allowing the 50% credit for 18 and 100% credit for 2019. So it accelerates the timing of those credits. There was the TCJA had also placed in limitation to the amount of interest expense a taxpayer could deduct, allowing a taxpayer to effectively deduct interest only up to the sum of 30% of a taxpayer's adjusted taxable income in the tax year. And for tax years beginning in 2019, 2020, this 30% limit is increased to 50% for most taxpayers. And the bill also included a technical correction to the TCJA with respect to qualified improvement property, which are any improvements that are made by a taxpayer to the interior portion of a non-residential building and are placed in service after the original building's placed in service date, and other than internal structural framework. And this correction now allows for 15-year property to be eligible for immediate deduction under the 100% bonus depreciation rules. Next slide. So in addition to the CARES Act provisions for businesses, there are a slew of changes to the individual side of things as well. Some of the more notable changes we have listed here, there were the recovery rebate credits. I know we've seen this plastered all over every news channel, and those checks are starting to come out. The bill also provided a new above-the-line charitable contribution deduction of up to $300 to individuals who do not itemize deductions. And for any individuals that do itemize deductions, the bill is permitting a charitable contribution deduction of up to 100% of their adjusted gross income. And then both the above-the-line deduction and the increased limitation do require to be a cash donation made in 2020. Unemployment benefit assistance was provided to millions of workers throughout the country who have either been furloughed or laid off or finding themselves without work, as the Act temporarily supplemented unemployment insurance benefit amounts and extended the duration of those benefits. The Act itself created 3 new programs. Penalties were waived for early withdrawal from retirement funds. Here the bill provides that the 10% penalty for early withdrawal from a qualified retirement account is waived for distributions up to $100,000 for COVID-19 purposes. And then furthermore, that distribution is taxed over 3 years, which will provide some relief, with the taxpayer having the option to repay the amount to the plan within the 3-year period. It also The bill also provided the limit on loans from qualified plans. They were doubled from 50,000 to 100,000, and that limit is increased for a 180-day period starting on the date of enactment. There is also
Jason?
the extended. Yep.
So with 5 minutes left, I think we need to, we'll go a little bit to like the tax deadline, and then that way I can wrap it up with some of the government contracting strategy. We knew we were going to have so much information, it was going to be hard to call it all in an hour. So I was just thinking maybe we go to the next slide where we talk about the deadlines and make sure everybody knows what the deadlines are quickly, so that you can change your budget. That's one of my options for you to help you as you're getting through the next couple of months.
Yeah, so real quick on that, I'm sure everyone's seen that the IRS has came out and basically postponed all tax returns, forms, attachments, and tax payments that were due on or after April 1st and before July 15th to the July 15th, 2020 date, which has been great for everyone. Obviously, the states, it varies from state to state, and each state will make their own decision on conformity. There has been basically changes every single day in monitoring the states. Here locally, as of before I think we got on this call, who knows if things have changed. Maryland, the 4/15 file and payment deadlines, including first quarter estimates, have been extended to July 15th. Same for DC, except your first quarter estimates were still due today. And Virginia, the filing deadline remains May 1st, with interest accruing if you don't make payments till June 1st. So there's some things locally. And if we go to the next slide, there was a chart that's I think was produced, a week or two back, but it goes to show you that most states have extended July 15th, with some not, and then obviously some states it's irrelevant in that there's no personal income tax in those particular states. And then next slide. And Christine.
Yeah, sure. So on our polling question that we have here, which of the following programs will provide kind of the greatest aid for you? We see some government contractors where folks aren't needing to use the family leave and sick leave. So that could be something that company that you're using. The Paycheck Protection Plan program, any state aid programs, or any employer retention credit that maybe you'll take, or might you just decide to defer your Social Security payments? And it's interesting. Like I said, this legislation kind of helps in various areas, and I think Bob would even mention that partly some of the supplemental CARES that's going to come out will probably go to more state aid programs, because the state programs got less, if you look at the overall.
I agree.
So our slide is yes, that most of you, 83%, will take that PPP. So moving on to the next slide deck or part of the slide, and we are at the 1:30 mark. Barbara, if you want to keep going, I can still keep moving on.
Yeah,
and if people have
absolutely. We can go a few minutes. Absolutely. This is very important information on this GovCon survival guide. I appreciate that. Thank you.
Yes, yes. And I know Jason is so excited to talk about his tax stimulus that he's taking away my time. But what I did here is I kind of listed for surviving now, next, and what is new for a government contractor. Take these three and these items within each and look to see what could help you, because the now of the mission critical items to do is really evaluating your cash position. And you should be doing that anyway, but assessing any delays on your contracts, we're going to provide you a flow chart on that. Establishing those COVID-19 charge codes to your contracts and your indirects, because there is some relief that I'm going to mention to you in a few minutes. Documenting the reduced productivity due to COVID for your employees and your subs, and do that documentation now while you're remembering it. and understanding your rights to teleworking, and what FAR clauses, and what guidance is coming out, to make sure that you understand your rights to telework, and issue essential letters to your employees to carry with them if employees aren't able to telework and still have to go in. The next kind of transition area would be, and that I'm still on that previous slide. There you go. I know, Amy, you were thinking, I was thinking next slide. But monitoring your accounts receivable, reaching out to your bankers, engaging with your contracting officers, and apply for the PPP. And then in the new is really gearing up your BD machine, staying on top of the stimulus funding and what agencies are coming out with, monitoring guidance that's coming out from all of the different agencies, understanding the class deviation memos that are coming out, and reviewing the COVID-19 resource centers that a lot of us have set up. CohnReznick has set up resource centers, PSC has set up resource centers, Bloomberg, various different companies have set these up for you. And throughout this, maintain your business system compliance as a government contractor, your accounting, your purchasing, your estimating. Don't let those drop off, and don't forget about CMMC, which is still a certification that's going to be required in the months and in the next years to come as some large contracts come out. So on the next slide, I talk about things that might change your financials and your modeling. What if you take the PPP loan? How does that change your balance sheet? What are some of these additional costs going to do to your indirect rates? For your accounts receivable, is your invoice payments slowing down, or is there some stall that just because people are working from home, it's taking a little bit longer to get invoices out and get them paid? And then for your pipeline reporting, do you expect that acquisitions may be a little bit slowing and there may be a little bit of slippage in that? And for your budget, pretty much break up your budget through July and then do another one through the end of the year. And as Jason just talked about, these tax payment deferrals, you're going to have to pay your first quarter and your second quarter all on July 15th. So, if you are still doing well and you're getting the same revenue from your contracts, you're still going to have to make that payment. And so you need to assess in your cash flow and in your budget, what credits you may be getting from the CARES Act, but what cash do you need to let out? And then do your resource planning and your utilization and look at, is there any reduced productivity from people working from home, lack of daycare that they have, or just the inability to get their work done because they can't travel. And then your second budget would really look at, if there is additional quarantine duration, what would that look like? So use those as sort of a guide to help you out budgeting. And then the next slide, this is something you can come back and look at, but I think your management teams on a weekly basis should be thinking in these areas. You can create your own resource center of people and teams. I know Barbara created our GovCon Net group to meet once a week to talk about issues and inform each other. And then in the next slide, I talk about specific GovCon aid and deviations that are happening to the FAR. And that the biggest one, the 3610, which is a section in the CARES Act that actually talked about government contractors. And a lot of people didn't realize that, but there's been more guidance that has come out. And I have a couple slides on 3610 for you. Progress payment acceleration was updated from 80% to 90%. Of course, there's been a lot of work remote guidance out from OPM and different agencies. And then the class deviation notices that we're getting from DOD, where the FAR or the DFAR councils can't meet. So the DOD acquisition office is able to make these class deviation notices to deviate away from what's in the FAR to something new through COVID-19 period. And then we've also been notified of the government requesting to accelerate getting payments out to small businesses within 15 days, and also requiring a contractor to try to do that to their small businesses. And then there's been some subcontract reporting extension. White House is getting out memos. There's lots of guidance every day. There's so much to read that you need to keep up with. And on our GovCon 360 website, we're going to have a list of a lot of these so you can go to them and look at them on an updated basis. So the next couple slides are on the 3610 and the memos that have been coming out, which is really here to help government contractors stay in a ready state and stay mission ready as a workforce. And so some contracting officers are having to mod contracts for government contractors that are asking for it because they have people that have quarantined or have had local restrictions, unable to work, or just unable to telework because of their job duties. So this is for any contract in existence from January 31st to September 30. And there's guidance in this memo, which I've left a link for you about what would be, how they would calculate that. And one important thing to mention that is if you receive 3610 funding, that would not be considered part of the PPP loan forgiveness in the calculation. So basically they're saying you can't double dip. But I think the most important thing is appropriate documentation as a government contractor right now for folks that can't work or can't get to their workplace. If the work site is closed, we believe that appropriate documentation and breaking out new cost centers within even your contracts or your indirects is really important right now. And the next two slides, which we're not going to go over, Amy, but it just talks about some certain things that are mentioned in the 3610 and some flexibility that the government is providing contracting officers to get awards out and to purchase. The micro purchase threshold and the simplified acquisition threshold for inside the United States and outside has been updated. For commercial buying commercial items, the simplified acquisition has been updated to 13 million. The Stafford Act has been invoked by President Trump, which will also help contracting officers. And then there's more on OTAs where agency representatives there was an increase in their levels for using OTAs. So the next slide, you can look at this later, but this is really just how to help you with remote work complexity. If you did get issued a stop work order or you're directed by your contracting officer. So take a look at that and you can refer back to that. Hopefully you don't have to because you're going to get the 3610 funding or you're able to telework as much as you can and keep your employees busy. And then for the next slide, we have just specific guidance, and then the following is large opportunities that are occurring in 2020. And these are opportunities and procurement that has been out on the street for, several months or started last year, where there's going to be virtual chats now about some of these large opportunities. You should look them up and see if there's something that you can team up with someone. Start looking at these opportunities, which are all over 10 billion. And then we have still about 144 of you, so thanks for staying on longer. We have a polling question that we'd like to ask you. And so with the new opportunities and the available funding, do you think that this will help you reopen your business operations? Will it help you with some short-term working capital? Because really the payroll, this is only for 2.5 months. You hope that you can operate for another 2 months, but you're not sure. You will not be, it's not sufficient to support your operations, or none of these apply to your business. I can't believe that if you're a government contractor with all the different money that's been obligated. I think there's a lot of opportunity for many different sizes and shapes and service businesses as a government contractor. So hopefully some of those opportunities, but still there were some of you that said 11% don't apply, but 45% is good to see that it will enable you to have short-term working capital, and 6% said it will allow you to reopen your business operation. So those are all good, positive things to hear, but kind of like wrapping up, and apologize that we went over, but the key takeaways, and as Bob mentioned, there's going to be infrastructure spending in the supplemental CARES. We think there should be additional money added to the payroll protection program, and maybe a second round of recovery checks, who knows. As Jason mentioned, there's additional guidance on the forgiveness of loans that should be coming out. Your procurement with your agencies may slip a little bit, but since the agencies have budgets now, this will put you back to work. So follow these agencies and seek these opportunities, be ready and be prepared to comply. And it'll be interesting to see, as Bob mentioned, these rental vouchers. It'd be interesting for individuals to pass that on to the owner of the building, and then that owner gets paid by Treasury. Who knows? And really, we're going to have to create new revenue to pay for all of this. If there's, more stimulus, this could reach into the $5 trillion that right now we're at 2.8. So maybe that's a little bit high, but still considerable funding. Bob or Jason, is there anything else that you guys would want to add as a key takeaway that I've missed?
No, I think you wrapped it up pretty well, Christine, and I'm certainly happy to answer any questions after the fact here. If there's questions, folks out there that want to know more, send in your questions, please.
Okay. All right, good.
Yeah, same here. Same here, Christine. I echo Bob's sentiments.
Good. Well, we told Barbara we would do some additional updates on this. As I said, the guidance for government contractors is just coming out daily, and we are all here together to work and figure it out, and keep each other up to date. I just want to give a shout out to Bloomberg and various government websites that are providing the information, and SBA, various banks that I've talked with. The payroll providers have been really helping, GovCons as well, and many professional, organizations like CohnReznick and others. The next slide, there are some links to our Coronavirus Resource Center, GovCon 360 that my group handles. And then we have a survey that we put out each year that's still out right now. It's out through May 1st. And we create a report called The Gauge that we'd love for you all to get a copy of, which is you can go there to the last link and get the 2019 report. But please go in, and when you do that, fill out the 2020 survey. It'll take you about 10 or 15 minutes. And that would be very appreciative, because I think a survey like this is going to be really helpful as we all get through this, and then we, figure out what the world looks like after this. Just, how do we manage our business? And we need benchmarking and surveys and statistics to kind of help us out with that. So I will turn that over to you, Barbara. Thanks for letting us go the extra 15 minutes. I appreciate
Oh
it.
my gosh, it's worth every moment. Great information, as you mentioned. Every day there are updates, and these are important updates. They're not only regulatory, but it's getting information out, resources out, ways to not only survive, but perhaps even thrive, right? And so we are most thankful to you, Christine, Jason, and Bob for this important presentation for government contractors on COVID-19 survival guide. I particularly liked the flow chart, Christine, that you put together for 3610. Handy flow chart, you know, sort of, you know,
Oh,
the decision tree around 3610. So I hope folks will use this as this webinar. A lot of great information, links. I find your resource center to be quite helpful. And I want to echo what Christine, Jason, and Bob all said. Please, you know, reach out to us if we can be helpful. They are willing to certainly answer any questions. I did want to share with the participants today, we did have quite a few questions. Jason, quite a few on tax. So, you know, I know it's the 15th and you're not going to be lonely after all, you know.
And Christine was trying to brush me aside.
So we have some tax questions in there. We have a lot of banking questions as well. A lot of more around, you know, my bank, you know, is an SBA lender, but, you know, it hasn't really quite, you know, risen to the opportunity yet. I feel like I'm going to miss out. Christine did mention that there are a number of banks that we know here in the GovCon community that are taking now new customers, correct, Christine?
yes, they are. Yep.
And
No.
if you want to reach out, you have their emails, reach out and she'll be happy to connect you to those banks that are willing to take on new customers that want to participate in the PPP loan. We will get, we do not have time to answer all these questions, but I will share with the participants that before we started, they all agreed that they will, anything we don't get to in questions, they'll be more than happy to answer and get back out to everyone as soon as possible. So I didn't want you to worry about that. Also, I wanted to mention that today's broadcast, along with the video, the audio recording, and the PowerPoint will be made available on the Chamber and VIP's website that you can reference back. A lot of great links and information that Bob, Christine, and Jason offered that you can reference back to. Like I mentioned, I love that flow chart. And I want to thank you, CohnReznick, for being an incredible resource to the GovCon community and the business community. I think, Christine, you said it beautifully. We're in this together, and together we'll get through this. Thank you again for your participation today, and we wish you, your families, and your businesses health and success in the months to come. Thank you for joining us today, and we'll keep in touch.